Hey, good morning, everyone. Excuse me. Morning. It is September 6th, Wednesday. We're already halfway through the week after just one trading day. That's what happens when we have a short general day or a short week in the market, I should say, because Monday was a holiday. We had Labor Day, and we started off the week fairly low volume, low volatility, as I was saying, right? Shorter week, Labor Day leading into September. You're probably going to see, again, lesser volume. People are still away. And I don't really expect that to change till next week or the following week, realistically. Then we can start to see an increase of volume and volatility in the market as we would expect more people, just institutional, larger traders, to be done their vacation and actually sitting back down at the desk for the first time, claiming that the summer might be over. So today we're going to be continuing with the commodity talks as we did yesterday. We're going to take a look at the market. We're going to take a look at some of the trade plan that we have on the session and where this market could go in the coming few weeks, as we have CPI, which is a very important metric that comes out next week. So CPI data is expected to be a little higher on the inflation front and could stir things up. So Oil, one of the main commodities that we've been talking about. I've been looking at this for months now, as demand has been continuously increasing, and the price of oil have been continuously increasing. So a lot of people are looking at this, especially investors, traders, right? Looking at the positions they might have in oil, looking at the price of oil, and asking themselves, is this a sustainable path of growth, right? WTI was under $80 of a barrel for the majority of the year, right? Those crude futures. But we broke above the price level this summer and we jumped to about $88 a barrel just yesterday. Brent has been traded above $90 a barrel after Saudi and Russia said that they would extend their voluntary production cuts through the end of the year. So this puts a little more pressure on inflation, right? Many had thought that the OPEC Plus leaders would lengthen their cuts into October, but the 3-month extension came to a surprise, and equities also saw some knee-jerk losses, with the likelihood of prices leading to a more monetary tightening based on inflation increasing on those increased oil prices. So the latest cuts from the Saudis, 1 million barrels per day, and the Russians, 300,000 barrels per day, are on top of the April cut agreement by several OPEC Plus producers, 1.66 million barrels per day, which extends to the end of 2024, while both countries stated they could even consider deepening their cuts further depending on the market conditions. So following the announcement, the U.S. National Security Advisor Jake Sullivan said that President Biden is doing everything within his toolkit to be able to get lower prices for consumers at the gas pump, and the national average price of the gallon of regular gasoline now stands at $3.811 a gallon. So according to the data from AAA, marking the highest seasonal level since 2012. So higher energy costs could also dent hopes and forecasts of a softer landing, which has gained a lot of renewed momentum following a lot of the economic data that has been coming out over the past few months. So expensive energy could curtail growth across the globe, especially in China, whose economy is under pressure due to the nation's stop and go pandemic rebound, and property troubles and debt problems also in China. The Saudis and Russians need to be careful about this and pull off somewhat of a balancing act, because if things get worse for China as oil prices stay high, their recent cuts may end up backfiring and reduce demand for the commodity. So interestingly enough, the G7, along with EU and Australia, also appear to have deferred regular reviews of their $60 Russian oil price cap scheme, despite Urals grade crude trading at $74 per barrel on average in August. So we'll see how that goes, because a lot of the data that's been coming out of the U.S. has been giving us the idea of a no landing / soft landing scenario. And as they continue their data dependency, we still have expected interest rates to stay stagnant into September, but there's a potential for one more hike into the end of the year. So, for example, right, Federal Reserve Governor Chris Waller also said that last week's strong economic data will buy the central bank some time to mull whether further interest rate hikes are needed. And that was a hell of a good week of data that we got last week, and it's going to allow us to proceed carefully. That's what he said. So referring to the non-farm payroll report, the PCE inflation, that's the Fed's major inflation gauge. We also have CPI coming out, but they also had a good JOLTS report last week. And while the progress so far has been encouraging, Waller said that the Fed can afford to keep rates higher for longer, and it's key to see whether low inflation is a trend or an outlier. So markets are widely expecting the Fed to maintain rates this month. And although it is uncertain over its rate path in the meetings thereafter, for example, into December, right, November, there is some expectations that we'll see. I think there are, 3 or 4 meetings left. There are expectations that there could be one more hike into the end of the year as things stand. So that's mainly what I was looking at today in terms of news. We can take a look at some of these equity markets because we have Asia is relatively up overnight, right? Japan is up, Hong Kong, China relatively flat. India is kind of flat. Europe down at midday in London, down about 0.6%. Paris down 0.7. Frankfurt 0.4. Futures earlier today we're down a bit, right? Down about 0.2% across the board. Crude down about 0.3%, and Treasuries 10 years down 2 basis points to 4.25. So still very heavy. What I'm looking at yesterday was a more of a flatline day. The sellers held out the sell side fairly well, especially to the close of the day. But today, what we're looking at, we got a little slip under the 4,500 level, and there are a few levels that we have to look at on the S&P 500 to consider today for the continued movement. I think there's, like I was saying last few days, there is bearish pressure in this market from last week, right? The bearish pressure comes from, excuse me, from constant market reoffers, and these market reoffers realistically have been holding out price action for the last 3-4 days, and we'll see if that continues today. But we are below some key levels on the S&P 500. 4496 is a massive region, all the way up to 4500. I understand it's a wider range, but into that block, as long as they hold sell, I think we can continue the sell side. Down below, 4483 is going to be the first target and the main target. If we lose that area, there's going to be a lot of downside to actually open up, in my opinion, on this market. NASDAQ is a lot less weaker, I would say, right now than the S&P. S&P putting the downside move just in the general equity markets, I think mainly along with IWM and Russell, right? If we put those guys together, they've been getting quite the hammering. But S&P, anything back above 4,500, 4,502, I think it's pretty safe for the bulls, but I think that's like pretty much the only condition that would be bullish in this scenario if they manage to run through that top and really hold it out. Otherwise, I'm leaning a little more bearish today. As long as 4496, 4,500 regional hold out, there should be some downside pressure in this market that could lead us into the 4483 region and even lower. So that's what I'm going to be doing. I'm going to open up our live trading room very soon with you guys. Hope to see you all there. Remember, check out our free course on our website, and let's go from there. I hope everyone has an amazing... Oh, my nose. Hope everyone has... I'm going to sneeze. That was unexpected. Damn. Hope everyone has an amazing day, amazing midweek day, and I'll see you guys soon. Remember, check out community.tradeproacademy.com for our open Discord, and let's do this again tomorrow. Thank you and take care.